Hello, everybody. This is Jose Blasco here. We are just on time to start the session today. We are getting together today for longer term trading, and we're going to be looking at the markets from that angle. Okay. Before we get started, as always, we have an introduction slide. So I would like to go over the messages and the content in the introduction slide, and from there we'll jump into the charts and begin our session. Looking for those longer term opportunities. We're going to be using options for that purpose. Anyway, welcome to the session. Official welcome, 4th of March 2020. My name is Jose Blasco. I will be your instructor. By the way, I'm just realizing I forgot to turn on. I have the wrong background, by the way. Let me fix my background so you don't need to see what's behind me, but we can basically, here we go. We can basically have only my silhouette in the background so you get to see more of the charts than the beautiful landscape of Singapore. And as I was saying, my name is Jose Blasco. I will be conducting the session today. And in order for us to get started, I need to quickly go over the disclaimer. So let's do it. Disclaimers: the following videos, clips, demonstrations are for educational and instructional purposes only. Traditive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through a demonstration do not indicate in any way the results you may receive on using our products. And that's the disclaimer. The session is now officially introduced, and therefore we are now beginning with the charts. Here is TradeStation. How are you, Pansy? How are you, Ray? It's very nice to see you guys. And we are now ready, as I was saying, ready to get started. Okay, so a few minutes ago, before the session started, I have been utilizing the scanners. Okay, I've been running the scanners, looking for market opportunities. Okay. Of course, when you look at the price action that we have here, okay, and this is BMY, this is Bristol Myers, but same thing. If we plug the S&P, actually, if we plug the S&P, it may even look more dramatic. Okay, here we go. So when we look at those different market movements in those different markets out there, even though today the market seems to be very nicely up 1.57%. So the fact is that there's been a lot of pain in the down direction, a lot of volatility and speed to the upside too. So when markets are trading in this way, you should expect your scanners to return few choices. Okay, why? Because it's too late. Basically, the moves already happened in both directions, so it's a little bit too late, and the scanners would have a difficult time returning many symbols. Okay, but in any case, we do have 5 types of opportunities. Let me zoom in. Okay, so the scanner is showing us here on the top opportunities to be directional long, next directional short, then purely non-directional, and then neutral, which is a form of non-directional but with a little bit of bias to the upside, so neutral long, or neutral short, which is again similar to be non-directional, but there is a bias in this case to the downside. Okay, so we have those 5 different types of market opportunities. Okay, 5 different types. Okay, and by the way, the ones on the top are debit, the ones on the bottom are credit. So basically, on the bottom, you are selling options and you want them to be as high price as possible. When in the cases on the top, you are buying options and you want them to be as cheap as possible. And all of this is kind of incorporated into the scanner, and that's how we come up with that list. So if I click on directional long, we got 2 symbols. If I click on directional short, we got 3. Non-directional, we got another 3. Okay, neutral, we got 1, and neutral, we got another 3. Okay, so we do have symbols for us to check today. It's not a lot. Okay, we've seen other sessions when we got a long list of symbols. That's not the case today, and the reason why that's happening is again because of those very violent movements. Okay, that the market is certainly moving in some direction, but actually kind of like in both, very aggressive down, very aggressive up, right? And then also there are fewer markets moving sideways given how violent this has been. So I want to very quick move to the daily time frame just to look at the S&P in a daily time frame, so you have a greater perspective of what's happening. And together with the S&P, I also want to move to the VIX, which is the volatility index that measures what is the average implied volatility in the options. Okay. So looking at the VIX, okay, and what are we dealing with? Where we have a very, very high VIX, okay? So 33 VIX, that's pretty impressive, okay? It's a high value. We went above the highest value from the last year. So that's certainly powerful when it comes to collecting premium, okay? But again, and I believe I said that last week when we got together to look at long-term trades, longer-term trades, I should say. We talked about the fact that when volatility is very high, it probably also means the market is moving crazy. And if the market is moving crazy, what is very difficult to do normally are the non-directional. Those are very difficult to achieve, to be achieved. Okay, so we'll see what's possible today. Okay, we'll be working with all of this, looking for opportunities that are reasonable and make sense. And therefore, in this sense, I'm switching back to my 55-minute time frame, and I will begin with non-directional trades. Okay, I have it sorted out. The top is AVGO, IBB, and PM. IBB, it's an ETF. Actually, it's the ETF that tracks semiconductor companies, and therefore normally we skip ETFs because they often carry less premium. Okay, so I'm gonna start with AVGO, and as I am loading AVGO on my other computer screen, I am now turning on a web browser, which I will bring to the main screen in just a second. One sec, almost there. Because basically what I want to take a look at is I want to take a look at the expected date for earnings, because certainly the premiums are very high because the market has been moving very intensively. But putting that on the side, what if the market, what if the options for that particular stock are very, very high price, not because the market has been moving intensively, but because earnings are around the corner? Okay, that would be a problem because earnings are a recipe for gaps, isn't it? So I am loading here Trading View. Okay, I'm loading here Trading View. Let me make this a bit smaller. And here you can see the red bubble with the letter E. That's going to be the next date for earnings, which is 13 of March. Okay, 13 of March. Keep that date in your mind. So when looking at a calendar, okay, we can see that the next Friday is 6, but the Friday after the next is 13. And that coincides with the earning days. In other words, we cannot use Friday 13 because we may have a gap against us before the options expire. So the only way to come up with a trade for that particular stock would be to use March 6th, which in this case, it may be possible given the high price point for the stock, which is a $276 stock. Okay, so that may be good. What I'm not happy at all is the stats. Okay, I can see Bojan joining us. How are you, Bojan? I can see Leland. How are you? So what I'm not happy at all is with the stats, because basically the stats are under 50%. We always shoot for 50%. You heard me say for sure that when dealing with non-directional trades, we'll take it, starting at 48%. Okay, so 48 is good, even though 50 is better, but certainly 42, it's below both 48 and 50. And that means that there is lack of institutional interest for AVGO, at least during the regular session hours. So what about pre and post market? So when looking at pre and post market, now we get a figure here, which is 57%. So basically, AutoUFO here is revealing what's going on behind the scenes, which is basically the fact that those institutional players, those large market players, are looking at Broadcom as a stock to be traded at that time not when the public does. Okay, that's when they come in and out. Okay, and there is institutional interest. If not, you will not get 57%, which it's a very high value given the fact that it's a stock, and stocks are fragile, isn't it? So that's pretty cool. So we do have something to work with. Okay, the only problem is that for me to do a non-directional trade on a stock, I need green UFOs and red UFOs. And as we speak, okay, where the price is right here, I don't have green UFOs. To find green UFOs, I may need to go back in time all the way to May or something like that. Yeah, May 19, something like that. Okay, so when I load my 55-minute time frame, by default, TradeStation is loading 1,597 bars. I'm not sure how far in date that is, so I'm just gonna force it to be May 2019 to make sure I got data below price, and hopefully my application will be able to spot on-field orders, and it does. Okay, so we do have on-field orders below price. Oh, that's not so good because we only have one UFO and we need two. Okay, we need two UFOs for this trade to be valid. Okay, so I may need to load more data. If I go beyond this point and I go look for data beyond that point, so we are basically talking about like January 19. Okay, so back to the 55-minute time frame, and instead of starting loading data from May, I may need to go as far as January. Okay, January 2019, 1, 2, 3, and now I should be able to see more than one UFO below. Not always, but should be the case, or could be the case. Let me see. Yeah, it doesn't seem that there is anything at that price point. Yeah, I went all the way. Yeah, so it seems that I will need to load data even further from that, which is, we are dealing now with December 2018. Okay, so let's keep doing this research. Okay, let's keep doing this research. So we are going to be looking at the sorry, not here. This one is going to be today, here in the bottom part, first date. So it's going to be December 2018. So one more month. Okay, and let's see if now this time we do have the data we need. Okay, let's see if we get, here we go. So now we do have UFOs. Okay, so now we have UFOs above, UFOs below. Actually, price seems to be kind of equal distance from current price to the bottom UFO, and also that red one here at 314, 315. But again, before putting too much time into this planning, which I already put some planning into this planning, the first thing I'm going to do before even running calculations and so on, remember, I started saying that I cannot surpass March 6th expiration, and realistically, this is 2.5 days from now. In other words, the premium may be high because implied volatility is to the roof, and also because this is a $277 stock, so we may find premium. But also, look at that. I should be selling options which are located at 315. So I'm not really sure if I'm going to get paid enough. Remember, we have requirements for how much we want to get paid, isn't it? So let's take a look. I'm going to look at the call first. Calls normally carry less value compared to the puts, okay? AVGO, here we go, Broadcom. So let's take a look at that, okay? Using March 6, if I sell the 315, I would anticipate this to be very, very, really poor, and that's what it is, okay? 2 cents, okay? So yeah, I mean, it's so unlikely for price to reach 215, 315, that really those options are paying nothing, okay? And unfortunately with AVGO, even though we do have UFOs above and below, and we have 57% probabilities, which sounds pretty nice, the reality, well, actually we got 50 now when loading so much more data, okay? So it seems that this institutional interest is picking up closer to the current date compared to what it was before. Okay, so which is an even better news, but still in this case, the premium collected would be too minor, too small, and therefore this trade is not justified from that point of view. Okay, so I'm just gonna go for the next one, which is going to be Philip Morris, and I'm gonna do the same thing with Philip Morris. I'm gonna check my earnings date. Okay, I'm using TradingView to do that. prior earnings took place in February 6th. Okay, so for me to find the next earnings, I need to scroll my chart to the left, and here is the next earnings, which is April 16. So that stock does for sure gives me a lot of flexibility with which expiration date to use. And I got 55% probabilities in the pre-post market. And I also have on the regular session, I got what? I got 55.83. It's even better. And by the way, the UFOs are more or less in the same location. So that's looking good. Okay, that's certainly looking good. Okay, and so yeah. So do we have something above? Let me see. Yeah, above. Let me see. Let me understand in the monthly time frame where the stock is at. Yeah, so you may have data. We may have data if I was to move all the way to November 17, okay, or January 18, something like that. If I go to January 18, okay, we may end up finding more unfilled orders above, okay, if we were to use, okay, potential UFOs higher using Jan 2016 starting date. Okay, so I will check that later if that is needed. Okay, but for now I do seem to have multiple UFOs above, multiple UFOs below, and in that sense I may have an opportunity to plan a trade and I don't need to load more market data. So if that's the case, let's take a look. Okay, so I'm going to load PM Philip Morris. Okay, how are you, Eru? How are you, Thui? Nice to see you all. So, so what do we have? Okay, so we're gonna start. I'm gonna skip March 6 because obviously it's very close in time. So I'll start with March 13. Okay, I don't need all the options. I just need a few. So we'll do 30, something like that. Maybe even too much. We'll do 20. Okay, and from here I'm just gonna right click. I'm looking at huge lack of liquidity here. Those options are not really liquid. Okay, but anyway, let's do the process and we'll conclude later what we got. So Iron Condor with Philip Morris. Okay, so with using March 13 expiration date, we have this from a prior trade plus one standard deviation minus one standard deviation. With those values in mind, we are talking about 90.5 and 80. Okay, 90.5 and 80. So what is 80? Okay, well, 80 is here. Okay, where is 90.5? Well, 90.5 is more or less here, which is above those UFOs. Okay, so same problem in both sides. Those UFOs are, nice, but our statistics suggest price could move further than that from now until March 13. So we need UFOs that are further away, and we have them below. And I do need to load more market data, okay, using January 17 starting date to see if we also have more UFOs on the upper part. Okay, very quick. I'm out of being perfectionist here. I'm going to look at the 90 call. Probably the answer is no. Okay, but I'm going to look at the 90 call on the 6. Okay, which by the way, yeah, I don't need to do that. Okay, already the 90 call on the 13 is paying me 20 cents, which is not enough. So there's no way the 90 call on the 6 is going to pay me more than that. Okay, there is more implied volatility, 56 instead of 38. Okay, but it's because again the Greeks become fake the Greeks the more we approach the expiration date. Okay, and so it's only 6 cents. So really not enough. Okay, so we're gonna have to go further out in time. Okay, we need to see how further out in time we need to go. But before that, of course, the most important part is the UFOs. So I'm gonna have to load more market data. To do that, I'm gonna uncheck AutoUFOs so I don't saturate my computer with processing power, because now I need to load data starting January 2017, and that's a lot of market data on the chart. So I will load everything first. You can see the PD on the upper left. Once it's loaded, I will then disconnect from the network, so the calculation will take place one time only. Then I will activate the AutoUFOs, and then I'll be able to do my marking and my drawing, and then I'll go back to normal. Okay, so just waiting for the PD to go away. Okay, just waiting for the pending data sign to go away, so I can then run the algo and get the UFOs on the screen. Okay, cool. How is it going so far, everybody? Any questions? If all is good, please go ahead and type all good. So that way I know that you are following. Here we go. We just got the market data. Give me some feedback, guys. It's so appreciated as an instructor. Even though you may be thinking, well, but I'm fine. I have nothing to say, but really, it's really really appreciated. So I appreciate that very much. So anyway, so I got the market data. So what I'm gonna do now is use a command which is .off for offline, and this gives me an option to working offline. So when I click here, basically I disconnected from the trust station network. So now if I enable auto UFO, okay, what that's gonna do is it's gonna plot the UFOs 54%. Okay, it's gonna plot all those different UFOs. Okay, and all of this is gonna be done only one time, so I'm not saturating my computer. And if I do that, well, notice that we just found a UFO here. Okay, we found the next one would be there, which is very far away. Okay, very very far away. And what's happening below? Okay, well below, to be honest, we don't need additional market data because it's right there. Okay, but basically we got this one, we got all the other ones below, and that's it. Okay, so that's it. So I got my drawings. Really, what I needed to find out is the drawings on the top. Okay, now I got 91.5 and 101.64. So what I'm gonna do now is I'm gonna go back to sorry for my voice, go back to my normal amount of candles. Oh, I just click on the help. Go back to my normal amount of candles. So the UFOs on top will disappear. Okay, but I got the purple line, okay, which is where the UFOs were. And now at this moment in time, now it's fine for me to use the command .on for online. And here in the bottom it says working online. And now I'm just gonna input my password. Okay, and with this, I will be back to be live with TrustStation, and I never got to saturate anything. Okay. Okay, so TrustStation, give us the reading. Very good, perfect. So I got it. So now, knowing all of this, okay, the question is, I could be working with a 91.5. I could be working with a 74. So, again, the call is always the concern. The call is always the concern because the call is always cheaper or almost always cheaper than the put. And if I don't get premium enough, then it's a waste of time. So that's why I call it a concern. So then I'm just going to go to March 13 to see how much I get paid if I was to use the 90 something call. So if I use the 90 something call, 91 and a half, I get paid 33 cents. Okay. Now spread is humongous. Okay, humongous. Okay. In any case, let me take a look. Am I looking at this here? Yes, correct. So March 13, yeah, March 13 is allowing us to sell 91 something because statistics suggest 90. Okay, so am I looking at this correctly? Yes, March 13, the 91.5 would be paying us 32 cents. Okay, that's good. Liquidity is absolutely terrible. Okay, so the problem with this trade is that you may place an order and you may not get filled at all. Okay, that's the problem. In the other hand, open interest is only 34. Okay, open interest is only 34. The 92 got zero open interest. Okay, so probably I would shoot to go for the 92. Market makers may be eager to fill at least some contracts to bring in open interest up, and then I may get, if I get a midpoint, I get 38. Actually, it's even better than 32. Okay, so I'm gonna try the 92. Okay, statistics certainly allow me to do that, and it seems that even though liquidity is absolutely terrible, okay, I'll check the next expiration date. Okay, because we may come up with a better trade with the next expiration date, but I'm gonna complete the plan for this one because if sometimes, okay, not always, sometimes it will work in the sense that market makers will want to take the trade because they have no open interest and they will basically make an option that is not liquid. They will make it liquid because they want the trade. Okay, so the distance from the current price to the top purple line is this amount. Okay, if I was to project that amount to the bottom side, okay, so this brings me more or less here. Okay, so really selling the 74, it's kind of not it's not a good proportion. Okay, so I guess that really the right way to approach this, even though statistics would allow me to do that, I don't have a green UFO equal distance, so I guess I should go for the 101.64. Okay, and the question will be, if I will go for the 101.64, so which expiration date should I pick? Okay, so let's say if I go for, what was the earnings date we said? That was April 16. So April 17 is not good. So what if I do April 9? Okay, so if I do April 9, let me load everything because now I'm going to go very far out, right? So we are looking for options to be located above the red UFO, which was 101 point something. So 101 point something, those options don't even exist. Okay, so they may exist on the April 17, but then here we got the earnings and then we cannot do it. Okay, so yeah, here you could, and you don't even get paid enough either. So yeah, it's unfortunate that UFO, it's $10 above 91. If that UFO was 95 or something like that, that would be great, but we don't have that. So no non-directional trades today, because both Philip Morris as well as Broadcom are not meeting our rules. Okay, so what I'm going to do is while I'm going to start looking at directional trades, okay, what I'm going to do is I'm going to run the scanner. So hopefully the scanner will pick up some other trade, and then we'll be able to plan those. Okay, probably not, but just in case. Okay. Very good. You guys say all good. Very nice. Leland, Pansy, Ray, Maria. Very nice. Mark, how do I disconnect and reconnect? Very simple. There is a command for that. I mean, you can do it manually, but it's a more practical or convenient to just use the keyboard. So while you are on the chart anywhere, okay, you just type a dot, okay, the period symbol, okay, and then you type off for offline, and then if you select work offline, that's it, you will be disconnected. When you want to come back online, then you go for .on for online, and then notice the bottom of the list is work online. So you pick that one, and the moment you pick that one, then it will prompt, you will have a window that it will be asking you to type your password, and then you can re-log in, and now you are back online. Okay, little TradeStation tip, which is probably convenient and you appreciate it. But anyway, let's continue. So while the scanner is running again on non-directional trades, I don't think we're going to pick up anything else, okay, because the market has been open for a few hours now. But just in case, okay, so I'm going to start looking at directional trades, okay, directional trades to the upside. We got JD and NLOK. So let's begin with JD. Okay, so let's see what we have. So loading JD, we're just going to wait. Taking a little bit of time here. Okay, Mark, you got it. Perfect. So good. So what do we have? Okay, so let's begin with the climate while the other chart is loading. Okay, so from a climate point of view, to be honest, it's looking good. Okay, so what do we have? Okay, well, we have a climate which is blue. It's a thick dot, so the climate is confirmed and is confirmed to the upside. That's what blue means. Okay, so I ignore the middle value, which is for down markets. Okay, and for up markets, basically, I am being told that statistics suggest that up markets should have an easy time lasting 5 candles. This is candle 2. In other words, if you were to take this trade today, it should be quite doable to remain in a trade for at least 3 more days, maybe more. Again, those are stats, but notice that sometimes those movements are going to be many more than 2, 3, 5 candles. But it's a good thing to know that this propagation of a climate just started. It doesn't mean it's a guaranteed it's going to continue, but it's a good thing that we are entering at the beginning of the climate, because if such propagation takes place, then you're going to be able to benefit from that easily. Okay, now 43% probability, these just kill me. Okay, this is way far from the 50% that we need. Okay, and it did kill me because I was looking at the average 41.22, and 41.22 falls in between that UFO. So if statistics were to be more powerful, then buying inside that UFO in the context of an up climate, that would be the way to go. Problem. Okay, problem. What's the problem? Well, statistics suggest there is not enough institutional interest when looking at regular session. So let's look at pre-post market. Sometimes we get surprises like that, isn't it? Let's take a look And pre-post market, surprise, surprise, reveals statistics above 51%, which means that this is where the larger market players are placing their orders. Okay. So what do we have? Well, we have a good news. We have a good news. The average is 41.20 something, and 41.20 something falls within those two grouped UFOs that basically overlap each other. Okay, that's where it is. Okay, so in other words, this area of price, this price range set by the two green UFOs, certainly qualifies as a good entry for a long trade. Okay, so looking good. Therefore, let me pause, rewind, and plan a trade. So JD seems to be a valid candidate for us to go long. The climate is fine. The amount of time spent traveling in that direction is fine. Everything is fine. So we are planning on a long trade. Because of that, the next step, the next natural step in our method, isn't it? If you follow the flow chart, right, would be to turn on AutoUFOs on the common time frame. And by turning AutoUFOs on the common time frame, you would basically conclude, where the target should be. And, I would be expecting some red UFO to be used as a target, and I don't see any. So when that happens, especially since what happened in the US market starting in 2009, that probably means that JD it's making all times high, and it's not, but it means then that all times high was made a long time ago, and long time ago was December 17. So okay, so we're gonna have to load data starting from December 17 to see if there is any red UFO above, and if there is, that will be our target. So December 2017, that is the date. Okay, so we may see a little bit of a pending data here. No, it's going quite quickly, I guess. Here we go, we got it. So I'm gonna turn on AutoUFOs. Okay, and yes, a red UFO just showed up, as you can see. And therefore, we now know, I'm just gonna make a note for myself here. We now know that the target to be utilized in this trade would be, let me put my mouse and click and hold so we can see the values. Okay, so the target for this trade would be 45.29. Okay, so 45.29, this would be the target for JD. Okay, cool. So with that in mind, I will disable AutoUFOs. I will go back to my normal amount of bars, getting a good habit of undoing things so you don't get into trade station problems. Okay, we talked about that last Sunday when we did sharpening. We talked about trade station tricks and trade station good practices. Okay, so always kind of go back to the normal settings to avoid problems. And again, so we have the climate, we have the target, so therefore the only thing left for me is to define my entry, which based on that UFO is very clear, is 41.5. Now, if you were to trade equities, you would need to use a stop below this UFO, which is a possibility that could make sense. A much more powerful possibility, instead of using equities or shares, I should say, it's to go ahead and use options contracts, because when you buy a call, for example, the most you can lose is what you pay for the call. So if you don't use stops, even though you are not using stops, the most you can lose is what you pay for the call, which is a form. It's kind of like the stop is built in, because the most you can lose is what you pay for the call, which is significantly less compared to the amount of value that particular stock is valid if you were to purchase a collection of shares. Okay, so in other words, we have a trade. Okay, we have a trade. I'm gonna put it on the Option Station Pro. So JD. Okay, JD. I'm gonna load it. We need to look at expiration date. We need to look at strikes. We need to build it, right? So we need to do all of this. Okay, but the first thing I would like to do, just to add a little bit of clarity, is to input values. Okay, which is target 45.29. Okay, entry 41.5. Okay, that's the trade. And then the bottom value, I'm just going to get rid of it because in this case, we don't need it. We only need to know where is our entry, where is our target, and that's it. Okay. Yep. I see you, Melanie. How are you? Nice to see you. Very nice. So, yeah. So, time to target. That's the next step. Okay. So, we know our entry would be 41.5. We know our target. We just set it at 45.29. So if you calculate the distance between 45.29 and 41.5, this is $3.79. This is how much you expect the price to move before you collect the profits. If we were to add an average true range in a daily time frame to have a little bit of an expectation of how long it's going to take for this to happen, we basically conclude that the average true range for that stock is moving very, very, very violently, as you can see. Okay, so if you look at this is not a joke. Okay, and this certainly distorted the average true range that is pointing at 2. That probably is more around 1.5, right? But anyway, so what it is what it is. So divided by 2.04, okay, that is giving you 1.8. And that, based on the rules that we have covered on the sharpening sessions, and if you haven't seen it, for sure you should be watching those. So the rules state that we're giving ourselves 1 week per each daily ATR to achieve the target. So in other words, you take 1.88, you multiply it times 7, because every week is made of 7 days, and that is now 13 days. That's the expectation of time for us to reach the target. So in one hand, you would say, okay, so 13 days means that I need to use March 20. That's what that means. Okay. And that's a good initial approximation. But remember, that's not all. The other thing we also said is that we need to be aware of earnings. Okay. We also need to be aware of earnings, which in the case of JD will take place on May 8th. And again, there is a collection of videos on the sharpening playlist. All the videos that start with option, I believe there are 7. So 7 like 2 to 3 hour videos talking about options. Okay, so don't miss that. Okay, and those videos basically are explaining why it is useful to also focus on that expiration date and use whichever is the greatest of the two. The calculation we just did that suggests that 13 days is enough, but we also need to compare that with May 8, which May 8 provides, instead of 13 days, May 8, which is going to be May 15, that provides 72 days. Okay, and therefore the greatest of the two is obviously May 15, and therefore that's the one we're going to use. So I'm going to right click to analyze and buy a vertical. Okay, we're going to start analyzing this trade from a debit spread point of view. We call that a vertical. You can call it a bull call spread as well. And I'm just going to click to activate that one. So we have it here, and now we can start adjusting this position by keeping in mind the values for the timing of the trade, which is enter the trade if the stock drops to 41.50 and exit the trade if the stock reaches 45.29. Okay, so with all of that in mind, we have rules. Okay, we have rules. So let me write it on the chart to make it as visual as I can for you. Okay, so we said the target is going to be 45 point something. Okay, so let's do something like that. Hopefully, visually speaking, it helps. So here, so we have we're gonna be selling calls. Okay, we're gonna be selling calls beyond the target. Okay, we're gonna be selling calls beyond the target. The target we just said that is 45.29. Okay, and then we also said the entry. Okay, the entry is gonna be entry is 41.50. Okay, so what we're gonna do is that we're gonna be buying calls, okay, between entry and target. Okay, that's these are the rules that we've been using. Okay, and we always start focusing on the target first, So therefore, let's say we had the 46 calls available. So that could be a good starting point. So let's take a look at what's available on the chain. Okay, let's take a look at what's available on the chain. And we do have 46. Okay, so we'll start with 46. Okay, and I will come here. Red color is sell, -1, that's sell. So, oh, by the way, I got the 46 already. So that's a good beginning. And knowing that now I got the right type of option here based on where the UFOs are. Okay, so knowing that I have the right option strike here, now my next step will be looking at the row where my entry is and confirm that my delta is at least, I just used the wrong drawing tool, sorry for that. Confirm that my delta is at least 30, which obviously is not, it's only 4. Okay, so why is that? Well, that's because the call I sold, it's probably okay, but the call I bought, it's not in the right place. So that 45, I'm gonna have to bring it down, and I can bring it down. For a while actually, because I could go as low as, let's call it 42. Okay, remember I need the call to be between entry and target. So from 45 to 41, I could bring it down all the way to 42. So let's see what happens if from 45 I drop it to 44. Okay, now my delta is 8. What if I drop it to 43? So now my delta is 13. What if I drop it to 42? Now my delta is 18. Okay, well, looking good, but I never achieved my goal of having a delta of 30. Okay, so if you get to this point where you dropped the call the lowest you could, okay, which was 42, okay, and you didn't get the deltas you want, well, then it means that the call that needs to be beyond the target needs to be further beyond the target. In this case, we're gonna go for 47 and see what happens. Okay, so you start from the target as a reference, then you go find the entry, and then if it doesn't work, you keep adjusting the other one to get the deltas you need. So you get paid properly, and you are efficient in this trade. Okay, and we'll start with delta, then we need to look at the gamma. Okay, so then the 42 it stay the same, and now the 46 will become 47. So if I do that, what happens? Well, now I got 22, which is better, but it's still not 30. So I'm gonna go to 48, and if I do 48, now I got 26, which is still not enough. What if I do 49? If I do 49, now I got 30. Okay, so I'm fine. Okay, I am fine with my 30 now. Okay, by doing the 42, 49, I get my 30 delta at entry. Okay, so now, having said that, it's time to focus on the gamma. And of course, the gamma, when you do a debit spread, will always be positive at entry if you build the trade the way I just said, with an option beyond the target and the other one between entry and target. So you're gonna be fine there. Okay, easy. But ideally, which is not always achievable, but ideally you also want the gamma to stay positive when you get to the target. Okay, ideally you want that. Okay, so how can I achieve that? Well, I believe that if I move this to 50, I may achieve that. Okay, now it's more negative. Okay, now it's more negative. What's the problem now? I should say less negative. What's the problem? My delta now is surpassing this a little bit. So what happens if I move 42 to 43? Okay, well, my delta, it's a little less. My gamma is a little less. So what if I do 43 and then I do 51? Oh, I don't have 51. Next one is 55 all the way, which is making my delta to be 49. So if I was to go back to 42, yeah, my delta is gonna be even more. So yeah, the best I can do it, okay, the best I can do would be something like this, which is almost 30 delta, okay, and almost 0 gamma. So that's the best it would be if I was to do a spread, which is gonna be the 43 and 50. Okay, so let me write it down. Okay, I would have loved if the 51 was available, but it was not. Okay, so 43 and 50, that would be the way to do it. Okay. Now, I'm not done yet. Okay, I'm not done yet. There is always another test which is worth it to check, and then you can compare the vertical spread with the second type of trade. And the second type of trade, you've seen me do that many times if you're part of the sessions, isn't it? Okay, and that would be to buy a call, a single call. So I'm going to analyze and buy a single call, and now I need to look at that more carefully. And before that, I want to check the chat box to see your questions, guys. So Mark says earnings. Okay, so Mark, the fact that we're using a May 15 expiration doesn't mean that we're gonna stay all the way until May 15. We will, if we reach 45.29, you will be out. And if the market was to move very slowly up, very slowly up, very slowly up, like crazy slowly up, and now you were to reach May 8, which is the earning date, well, the day before that, you have to get out, no matter where price is. Okay. So maybe price, tomorrow or later today will crash like a rock, comes to this UFO, you buy the call or the call spread. And now let's say it goes up, and now it is something like that, and some like that, and like this, and like that, and it spends the whole time like this from now until May 8. So what do you do on May 8? Get out here. You never reach your target at 45.29, but it's okay. Get out, because tomorrow is earnings. You may have a gap all the way down here. And now what? Now you are underwater because your entry was here, and now price is below. Okay. So the day before May 8, you will need to get out, even though we're using May 15 expiration, to benefit the most we can from the rise of premium as earnings approach, if the trade was to be a very slow moving trade and it took a lot of time for price to progress, because all the time also implies a loss of premium in the form of time decay, isn't it? So to offset that, we're using that expiration date, but it doesn't mean we want to stay until earnings. Okay, Mark? Okay, so now the second attempt was going to be, okay, so notice I got the vertical spread here, but notice how it's unchecked. Okay, you guys see this vertical is not checked right here, is not checked. Okay, so I'm just focusing on the single option. That's what I'm doing right now, the single option. Okay, so focusing on the single option. Okay, I am buying one of the 43 call. This is what I clicked randomly, and by doing that I get 47 delta, which is way too much. So how can I make this less? Well, I should buy the 44, maybe the 45. Let's see if I do 44, 45. Yeah, it's not gonna work. Yeah, it's not gonna work, because for me to get my 30 deltas, basically I will need to buy a call, maybe the 47. Here we go. If I buy the 47 call, I got 30 deltas, okay? And it's beautiful because you got 30 deltas and you got positive gamma at entry, positive gamma at target. On paper is amazing. But, if you know about options, okay, your target is 45. You're gonna get out at 45. Your strike is 47. So what does that mean? It means that when you get to your target, your option contract is still out of the money, and really, you are not really gaining, the premium at the speed you should, because the rate of time decay may be eroding this trade way too much. Actually, this trade would be losing money at a rate of 1.97. Okay, 1.97. And yes, it would cost you 138 to get into the trade. Okay, so 138, you lose 197, versus you do the spread. And if you do the spread, it's going to cost you a little more, 201. Okay, but then you lose money much more slowly, and most importantly, you get the delta you want, and you get a pretty stable gamma, which is much more aligned with the rules. Okay, so it's not ideal, it's not perfect. For this to be perfect, we will need the 43 and the 51 call. The 51 probably will make it perfect, but remember, we didn't have 51. The next one was 55, so that's the best it can be. And therefore, this trade, my friends, with the spread is valid using the 43 and 50 call on jd.com, using May 15, 2020 expiration date. So what I'm going to do is I'm just going to place an order here. I'm just going to trade. Okay, I'm just going to trade. I'm going to make this to be a market order. I'm going to use a day order only. And very important, guys, don't ever forget your activation rule, because if you forget the activation rule and I click place orders now, I'm going to get filled. Okay, so you would want to click activation rule, okay, and then set up your activation rule, for JD, which is the stock we trade, and make it in a way where you want to take this trade only if JD is less or equal than 41.5, which is the entry price we have set earlier on the chart. That was the green UFO lining up with the moving average on the left. Okay, so I'm gonna click OK, 1, 2, 3, and I'm gonna place order 1, 2, 3. I'll have a confirmation window here. So I am buying a vertical spread made of the 43 and the 50 call using May 15 expiration. The order, so if I don't get filled today, will be expired, so I can come back tomorrow and reassess the trade, and you will not be charged exchange fees, because if you place the order with GTC and then you cancel it tomorrow, the cancellation implies exchange fees. Where if the order is day order, okay, and is not filled, then the order will be canceled for you automatically, and there are no exchange fees because it was a day order. Okay, so that's why I'm using the order to force myself to review tomorrow and to avoid myself paying exchange fees. Okay, and now I'm just gonna confirm this trade, clicking on yes, 1, 2, 3. So the order is in. And if I go to my manage tab, so here is my JD spread waiting to get filled. We'll see if that's the case today or not. You will need a pretty massive drop for that to be the case. Okay. Cool. Quick look, since we are looking at the manage tab, we have a trade long on BMY, okay? BMY. We just planned on a long trade, okay? And I'm pretty sure some of you are in the trade with BMY, which obviously, given what happened last week in the markets, the trade is obviously not performing well. But at the same time, if you think about it, we entered, if I'm not mistaken, okay, I'm speaking out of memory, but if I'm not mistaken, we entered the trade. I would say it was around here, okay, something like that, somewhere there, okay. And since then, I think it went our favor a little bit and then just collapsed. The world is ending. So given the fact the world is ending, this trade is providing $70 of pain. That's nothing, okay, that's nothing. And the expiration date for that option is April. So you have a month for this market to go back up. And what's the good news? Well, when you look at the climate, both on the S&P or that stock, 11 candles out of 5 seems to me that this climate has propagated way too much, probably going to bounce back up. New UFOs are showing up. So, I mean, again, fundamentals are fundamentals. The coronavirus keeps killing people, etc., etc. Crazy things could happen. But based on technicals, price coming to this UFO is probably the recipe for this to go back higher. Why? Because a change of climate is looking like is going to happen based on probabilities. Okay. And then just to share a little bit additional insight, today I was talking with some friends that work in brokerage firms in China, very large brokerage firms for Chinese equities. And they were telling me that, with the coronavirus, everybody was sent to work from home. But since starting tomorrow, actually, everybody is now being called back to go back to the office and work, meaning that the protocols they have implemented in China actually didn't cure the virus, but certainly they have done an amazing job at controlling it. If you think about the huge amount of billion of people that live there, the amount of cases are so limited compared to smaller countries. Where there are many more cases in proportion. So China is close to going back to normal, at least from a working point of view. I don't know. You never know, because now people are going back to normal and going back to work. And next thing you know, now the virus will start spreading faster again. So we'll see what's going to happen. But, yesterday with the drop on the interest rates in the US, plus in China, people going back to normal, at least short term, all of these should imply a bounce, isn't it? So again, not to bias you, just to share a little bit of, let's call it insider information. Really, not insider information, it's just a friend. But, and everybody in China knows that everybody goes back to work tomorrow. But maybe if you're in the States, you're not aware of that. So that's why I called it insider information, okay? Nothing to worry about. This is supposed to happen. Not every trade will work. Good news, the most you can lose is what you pay for the option. Right now, it's $70+ of pain. And we are still in the plan. So this could certainly go back up, okay? I remember, well, I want to say two things here. First, remember, you should not be running one trade at a time. You should be running a portfolio where you have multiple trades that are long, multiple trades that are short, isn't it? We talked about portfolio management. Again, you have sessions in the sharpening playlist go ahead and take a look if you miss them. Okay, go ahead and take a look if you miss them. Um, so you will understand better what I mean. Remember, I always say as well that in the session, of course, all of you enter trades at a different time. All of you have different risk appetite. All of you have different account size. So my assumption can only be one, which is every trade I plan you need it, which may not be the case. So it's to you to decide if the trades I plan you want to execute or not, depending on how many trades you're already running in your portfolio, given your portfolio diversification. Okay, so but my assumption is every trade plan you need it. Okay, so I can go ahead and plan the trade beginning to the end. So if you need it, you can actually execute it. Okay, but again, coming back to what I was saying, so that's one thing I wanted to say. The other thing is this trade is absolutely valid, and it would be one of those trades that went against you if that was the case. Okay, also, long time I haven't said it. In the sharpening sessions, okay, there is also a video that talks about damage control, gamma hedging, okay, things like that. So go take a look at all of these, because another action that could have been taken here is that you could have got short shares of stocks, at a certain price point here, neutralizing your delta, but leaving your gamma to be positive, and therefore picking up negative deltas on the way down. So if the climate changes, then you will want to get out, and actually, you would have taken a little bit of a pain with the long call, but then with all this move down and a positive gamma, your gamma hedge would actually would have made a profit for you. So you would be in a profitable position instead of a losing position. Okay, now careful with that. And again, I would need to send you to watch that lesson, because I don't have time to repeat the whole lesson in 5 minutes. But these gamma hedges work well when you got crazy moves like that. Okay, if the market went down just by a little bit and then back up, then the gamma hedge does nothing to you. Okay, basically locks on a loss and doesn't really help. But if the market really crashes, then the gamma becomes deltas, and deltas on the opposite direction now pays you. Okay, so keep that in mind at all times. Cool. So what else? Well, non-directional. Do we have anything else? Non-directional? No, same opportunities. So I'm gonna have a quick look at the shorting opportunities. Okay, maybe ZS. Okay, maybe ZS. I'm not really sure about the liquidity of options for that stock. So I'll look at that. Okay, so ZS. What do we have? 260 to 50. Not bad. It's okay. It's tradable. So waiting for pending data to be loaded. We got 46%. That's not good. What if I go pre-post market, or sorry, regular session? We got 56%. Wow, interesting. Lots of institutional interest here with that particular stock. Okay. Now, yes, climate-wise, careful. We got 8 candles in climates that should be 7. So we just surpassed the climate by a little bit. Okay, and this basically, at a basic level, you would say, okay, too late to trade. In the sharpening sessions, we get a bit more advanced and a bit more flexible, isn't it? So what we do is that we take that number 7. Okay, so we take number 7. Okay, and then we add 50%. Okay, which is 3.5. So 7 plus 3.5. This is basically 10.5. Okay, and therefore we are giving ourselves the opportunity to trade up to 10.5, and this is 8. Okay, so we are still on time to trade, but because we surpassed 7, then the rules that we have concluded and discussed before is that, okay, it's okay to trade, okay, but only with 50% of the normal risk. Okay, so this is what you would do. Okay, only 50% of the normal risk. So in other words, if you are a trader who normally risks 2% of your account, so this trade will be taken with 1%. If you are a trader who risks 1%, you risk 0.5. Okay, that's what you would do. Okay, now unfortunately we have no trade here. Okay, unfortunately we don't, because I also need an average located at 53.24 to be enveloped by the UFOs, and the UFOs are located at 56. So I don't have a UFO at 53 something. Okay, I will need a UFO here for this trade to be valid, but I don't have a UFO there. My UFO is 56, so I don't have a situation where the UFO and the EMA are basically agreeing, and the UFO is enveloping the EMA. Okay, so the trade is not valid in the case of ZX. But anyway, nice probability, 56.6. So keep an eye on that guy, because again, there are still 2 more days to go for us to be allowed to trade that market. And the fact that there is no red UFO now doesn't mean that there is no red UFO 2 hours from now, because we are using the 55-minute time frame. So 2 hours from now, you may have a red UFO at the right price. Okay, and then it will be time to trade. Okay. Cool. So everybody, we just reached the top of the hour, so it's gonna be time to conclude the session here. It's been my pleasure to spend an hour with you. Hopefully the session met your expectations and is helping you to progress in the beautiful world of options trading, both directional and non-directional. Again, when those massive moves happen, certainly they open up opportunities, but there are many days like today where you run the scan and you got few opportunities per scan. So it's important to remain patient instead of making up opportunities because you see the premium, it's appealing, leave to trade another day. Sitting in your hands is trading. Okay, we have Bojan with us, isn't it? So Bojan will tell you very clearly that not trading is certainly trading, okay? And he would have a very strong point about that, and he's so right, all right? So follow the rules, okay? And keep running the scanner maybe a few times a day, run it tomorrow again, and you'll see all other opportunities will show up. Use patience until you have what we need, and then take the trade. Everybody, super pleasure. See you on Friday. On Friday, we'll do our sorry, not Friday, tomorrow, right? Let me confirm that, guys. I got confused and I don't want to confuse you. Okay, so I'm just gonna bring tradewithufos.com/get together. Okay, so let me bring that here, so that way I can confirm it. This week we had a change of schedule, isn't it? And therefore I don't want to drive you totally crazy. I already confuse you a bit with the change, so I don't want to confuse you on top of the original confusion. So yeah, we're talking about Friday. Okay, so today is Wednesday and today we are done. So next one, Friday, 11 a.m. same time. Okay, it's not 9 a.m. it's gonna be 11 a.m. That's gonna be Friday. Okay, and by the way, expect some changes next week as well. So please pay attention to the schedule, because this is a very hectic month for us with other projects that we launched, as I'm sure many of you know, within FX Street, and especially that applies to you if you are not a student. We have a very, very powerful initiative to really help a community that is in a very difficult position and a very big pain, and that includes myself, because I used to be one of their students many years ago. So I feel the pain myself, and we are putting together what I would call a philanthropic organizational kind of structure to be able to run sessions, for OTA students if you are one of them. So take a look in case, and that's the reason why there may be changes in the schedule and so on. Okay. Anyway, everybody, I'll say one more time, super pleasure, and looking forward to Friday to see you again. And on Friday is going to be the short-term trading. See you then, everybody. Take care. Bye-bye.